Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? Because at the moment we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis. First, we will be covering the technical aspect, then we will go and see what we have from a commitment of traders perspective. So COT data, which is basically what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting here on the monthly, we can see how the market has just provided this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you want to see is the market create a move to the upside to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. So in this case, by taking our Fibonacci from the high to the low of this impulse, we can see how we have a 0.32 Fibonacci retracement lining up exactly at this area that we did expect the market to correct to, at least the market to correct to, before then starting a potential continuation to the downside. However, since we have the M pattern, we know that a deeper correction is still very possible. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has just tested this previous weekly resistance here that was turned support here. Now, how we can clearly see this level? Well, an easy way to do that is to drop down on the line chart. And if we check the line chart, we can see how the exact previous resistance turned support was this angle that we have here. And switching back to candles, we can see how the market respected the level as support perfectly and currently is rejecting it to the upside exactly as we wanted to see. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down on the daily time frame, if you remember, we made a full breakdown of EURUSD few days ago when the market was around this area, testing the support that we had here, and I explained all the reasons for which a rejection to the upside was quite likely. And in fact, that is what the market did. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, what we can see is that lately net positions have been growing rapidly. We went from having minus 23.2k net positions all the way up to having minus 1.5k net positions, with 2.4k longs added with the last report and 6.1k shorts getting closed, reaching 200k longs almost and 200k shorts. So net positions are getting increased. Now in the long term, we're still bearish. We have seen that after the completion of the M pattern that we have on the monthly, we can expect a continuation lower for the completion of this impulse correction and impulse pattern. And that also explains why we still have pretty high short positioning from an institutional perspective. However, in the short term, we clearly have strength and we see that also reflected in the price action. Therefore, more continuation seems quite possible. Specifically, if we look here on the daily, we can see how we just created a strong impulse. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have at 0.32 and 50% Fibonacci retracements lining up exactly at this area that we do expect the market to provide a correction to before then printing a potential continuation to the upside. So here on the daily, everything seems quite bullish. What we can expect is a correction to this area before then getting more continuation. Now, in general, In a situation like this, if the market will correct to this area, how we will be approaching that with students. Now, as usual, we would be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes. So 4-hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective instead of this area waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we would be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to potentially complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.